Hey, good morning. Hey, it's Hump Day. It is a Wednesday, August 18th. And as we roll on here, guys, this is Rick Hoffman with LMA Trading. And just want to come to you here to share my thoughts on the pre-market. I'll give you my thoughts a little bit on the last 2 days. We've seen kind of a downtick, but with Monday, we got a huge, well, it wasn't a huge pullback, but we had a nice pullback in the morning, only to have the bulls come in and buy the dip and push that up to in the Dow and the S&P hit all-time highs. Then yesterday, and after hours and pre-market, the markets pulled back and they continued their pullbacks. We did get some buying towards the end of the day to push prices back up, but they were unable to recover. And then futures last night, the futures were down last night, and they are still down and under a little bit of pressure here today. Um, the Nasdaq has come back now. It's at zero. Basically, it hasn't really made a move any particular way. The Dow is negative by 102. The Russell is negative by what is that? 5.10, and then we have the um, S&P that's down about 6.5. But hey, before we do and we talk a little bit about these things or what I'm seeing here on my charts, let me just do a little bit of housekeeping. As you know, I am not a financial advisor, nor do I give financial advice. That these videos are strictly for my own personal use, as far as my trade journal and as part of my education and review as I do the pre-market prep. This allows me to kind of think out loud, understanding that stocks have risk, options has risk, and neither stocks or options may be suitable for any investor. And obviously, I used to be a banker with Chase Bank and work in the investment mortgage area. And as we used to always say, is you know. Past results are not any guarantees for future returns. So, with that being said, that's kind of why I do what I do here. But at the same time, just it's a good education. So you invest your own money, you put all your money in the market, or you put any portion of your money in the market. It's at risk, and you can lose every bit of it, just the same as you can make some money. So, with that being said, let's jump into what we're going to talk about here today. Just to let you know that the VIX has been pulling up. It's about 18.2. We just got a little bit of a tick down here on the VIX here on the left side of my chart. And but so we've been having some volatility creep into the markets, which is, I think, understandable, because now the markets are under pressure a little bit, and possibly, to the downside here today. Um, if you've been watching my videos, I did change my chart around a little bit. Went to the light. I do that from time to time. Sometimes I like the lighter background. It allows me to see things. And then I'm using on the candles here, I'm using the TTM trend. If you're familiar with that, with the open candles, which is part of the Japanese candles, as far as, giving us the who's in control of that particular time frame on the chart, and showing us whether or not, the bulls, like if it's an open candle, the bulls are in charge of that particular time frame. If it's a filled candle, then it's a bearish candle, and so that's kind of a telling. And then the TTM trend tells us, if we're on the blue candles, we're in the trade. When the candle goes red, we get out of the trade. So, and these are my 4-hour charts. This is what I look at here on my 4-hour charts. My actual charting I do is over. I use my actual chart here, which is I use a weekly chart and I use a daily chart. So, with that being said, let's go ahead and take a look at the Dow. And so we got as we kind of look at the Dow here today, the trend is still very, very bullish. We've pulled back to this support level here yesterday, and so we are sitting right here at this support, and kind of giving you an idea that, we're at the 35,179. So price is right here at the bottom of that. And so that's where we're pushing to here this morning, showing that right now the bears are in control of this. But if you're in the trade here, long, if you were still trading this, would be an indication that, you could still possibly be in the trade. But for myself, I wouldn't be. I probably would have got out here when I saw on the squeeze, when I saw momentum begin shifting to the downside. I probably would have got out on this candle here. I'm a relatively conservative trader. Profits are profits, and you can't go broke taking profit, even though if the profit may be much smaller than what you would like. Everything else is kind of indicating to the downside, but we'll see if we get a bounce here off of the resistance, or off of support, that is, in the 21, as it has done before in the past. And as the VIX is still dropping here, so we may see some ticks to the upside here a little bit as it begins to push. When we first came on here, we were like 102. Now we're 78 on, we're down 78 on the Dow. So today the Fed Chairman Powell, or Kapow, or whatever you want to call him, he's um, the Fed are coming out with their Fed minutes. So we'll see what they have to say about, inflation tapering. I think the markets are going to be kind of not making any huge moves, probably one way or the other, with it, until that news comes out. And that may already be priced in with the slight pullback that we've got. So this might be a buy the dip opportunity. That's what this market has always proved itself to show us. So we'll see. But I think the bigger correction is coming, and so I just wish to keep my position size small on anything I take, and I'll probably work off of shorter time frames instead of the, as long as the bullish trend is in place, we'll probably work off the 30-minute time frame and place our trades. If we take any trades to the long side, right now everything we have is on the short side. Yesterday was a good day, so we'll see how today pans out, because we're still holding those. So we don't want to overstay our welcome, definitely in this market. Let's go ahead and jump into the Russell. The Russell, I think, did break this this support level right here. We didn't close above it, but we are opening down a little bit on it here today. So we're only down 2.8. The Russell doesn't make huge moves. But the ATR range on it is about 38, almost $39, is what it's the daily range. We are in a daily squeeze to the downside. We are in a weekly squeeze, which is showing momentum to the downside. So we'll see if we can break. If we break this support here and close below the support, I believe the Russell's going to still continue going down there. It's kind of the leading indicator, and we're just kind of waiting to, at least I'm kind of waiting to see if the markets follow suit. Let's take a look at the NASDAQ. The NASDAQ has pulled to positive territory. It's up 13 and a quarter. So tech stocks may be pushing off of the 21, which it has always done on the daily chart. And so holding that support line of 14,917. So set, on this hammer candle right here. So, right now it shows that the bulls are in control and pushing the price higher. So there's some buying going on here in the tech stocks, which may also indicate why, if fear is settling down, and people are seeing this as a buy the dip opportunity. So something to consider as you look at some certain tech stocks. Apple's been really strong, so we'll look at Apple here in just a second. I owned Apple last week, but I let it go because I felt like it was going to be. But that price target, or the price at 150 on Apple, if it holds that, definitely is going to go probably higher. Even if the market pulls back a little bit, it's behaving very strongly right now. And then let's go ahead and jump in and take a look at the S&Ps. The S&Ps are also showing some buying going on and some, possible bounce off of the support, and, where it bounced yesterday off of the 21 and pushed back up. We're only down 3 now on the 3 points on that, but the bears, or I'm sorry, the bulls are in charge of the daily candle on that right now. So right now, again, this just it might be some chop here today, waiting on the Fed Chair Powell to put out their minutes. Now, if the market thinks that the whatever he has to say is already baked in, then it may be a non-event. Have no way of knowing. But I'm probably going to be conservative here this morning, waiting to see what may happen. Let's take a quick look at Apple. Apple is, this support line of 145 right here, which is this yellow line right here. I'm going to make that, let's, because when I change my charts around, these, so let's make that green. It shows up a little better. But that support line right there, I like that, looking at some credit spreads. But, if we can stay above this here, but we are between the 1 ATR and the 2 ATR. So, we broke out of this. We broke out of this nice bull flag pattern, and so on the weekly chart, so looking good on the long-term chart. And I would definitely would consider we get a little pullback here this morning, possibly down to like 149 right in here at the 1 ATR. Then, I would definitely probably look at this where you have a daily squeeze, pushing momentum to the upside. It hasn't fired yet. So this could still just be in the chop range. We just, are a little bit above that. And so like to see it hold that. Like to see the Bollinger Bands are starting to open up, and open up and maybe give the price action room to breathe. But if the Bollinger Bands staying tight, then this very well could be a bounce back to the mean, to the 21 possibly, and or support here, some level of support of, to the 21. And so that's something I'll be looking at on Apple. We do have, Tesla. Tesla, was some couple pretty decent pullbacks on this here. Hang on a second here. Like I said, when I change my background colors, and I have to change around some of my indicators here. But anyways, we were looking for a flush. We got the flush here. I pulled the order. I was going to put in a credit spread. I'm kind of glad I did, but now we have, it looks to be that we are going to get a pretty decent little gap up here this morning, back up to right now. It closed at 665.71. Now it's trading at 672 here in pre-market. So if this continues to hold, we've definitely got some buyers coming in, and we'll see. But the pressure is still to the downside. We got decreasing momentum on the MACD. On the long-term chart, we've got a weekly squeeze that looks to be possibly getting ready to fire to the upside. So this could be setting up. I like this setup on Tesla. We've been an owner of this before. We buying the stock, but definitely looking at possibly, if we get something here and we get a close above the 21, and we can break this pattern again, then definitely probably be looking at a debit spread, a call debit spread on something like this here, and to a push to the upside. The Bollinger Bands are not showing that they're opening up, but again, this is pre-market on the light volume. So that's kind of what I've got for you here today. We are holding positions on Goldman Sachs, short positions here. We are looking for a price target here. Right now we're showing, price action to probably be pulling, or opening kind of flat, but, we've gapped down here a little bit this morning, where we're at. So So, right now it's, I'd like to see this push down where, to continue and really see a flush. We had a little more momentum as far as a little more volume come in towards the close, which bought the price up. So again, this, financials are been very, very strong. So we will be, we'll be looking at the financial sector here. Let's take a quick look at the financial ETF. So, which, looks similar to Goldman Sachs. So, decreasing momentum curling here on the MACD. So, the weekly chart also showing, a little weakness here, but it does like to hug the 3 ATR. So it has plenty of room to run to the upside. Same thing here. So we'll see, we've got this doji candle here. So we'll see if we get any follow through to the downside on that. And then of course, we do have our IWM position. That is the, oops, wrong one. Come on. There we go. IWM, which is our position or our on the Russell. It's the Russell ETF. And so we are looking at that to flush to the downside here. And like I said, let me change this around, kind of add to make it a little more noticeable. So again, this is kind of our flush, what I'm looking for on the Russell. So actually, this was a previous play of last week, which was a good play on a credit, on a debit spread. And so large risk, small reward. So that's kind of where we're looking for that flush to continue down. We're close to probably closing this trade, but we've made some good profit in it. So we'll see where we go from there. So if this continues, we'll write it for a little while longer. But in this market, again, this could be setting up if things begin to make a turn to the upside. So with that being said, you guys have a great day. Happy trading to you. Make sure you click the like, subscribe button, and we'll talk to you tomorrow in our pre-market prep. Happy trading.